Investing, a crucial pillar of financial stability, has been decisively influenced by one book, The Intelligent Investor. Imagine a key that could unlock the door to financial freedom. This key is investing, an essential part of securing your financial future. It's not just about stashing money away, but understanding how to make your money work for you. When done wisely, investing can turn your hard-earned cash into a growing asset, ready for you to tap into when you need it the most. Now let's talk about the book that has shaped the foundation of investing for many, The Intelligent Investor. Penned by the renowned economist and investor Benjamin Graham, this book has been the go-to guide for many successful investors. Warren Buffett, one of the most successful investors of all time, has often credited The Intelligent Investor as the best book on investing ever written. So what's so special about this book? It's all about value investing. This approach encourages investors to buy stocks at prices below their intrinsic value and to hold them until their price reflects the real value. It's not about quick money or gambling on the stock market's ups and downs. It's about taking a long-term view, understanding a company's fundamentals, and buying when the price is right. This book has had a profound influence on the investment world. It has helped many to understand that investing isn't necessarily about being the smartest or the quickest, but about being patient, disciplined, and above all, intelligent. It's about not letting your emotions dictate your investment decisions, but letting sound judgment and a thorough understanding of the market guide your choices. In essence, The Intelligent Investor is a timeless guide that lays the groundwork for investors to build a solid financial future. It's a book that has stood the test of time and continues to be a beacon for those seeking to navigate the often turbulent waters of the investment world. The Intelligent Investor lays the groundwork for investors to build a solid financial future. Inflation, an investor's invisible adversary, is a core subject of The Intelligent Investor. This economic phenomenon is like a silent thief, slowly eroding the purchasing power of your hard-earned money. Benjamin Graham, the author, stresses the importance of understanding inflation and its impact on investment decisions. In the book, Graham explains that inflation can significantly reduce the real returns on investments, particularly those with fixed interest rates like bonds. As prices rise, the fixed income from these investments buys less, diminishing their value. However, Graham also presents a hopeful message. By investing wisely and diversifying your portfolio, you can mitigate the effects of inflation. Investments in stocks and real estate, for instance, often keep pace with or even outpace inflation. Graham's wisdom is timeless. In an age of fluctuating economies, understanding inflation is more important than ever for successful investing. To outsmart inflation, one must first understand it. The Intelligent Investor offers a comprehensive analysis of a century's worth of stock market history. It's a journey that spans decades, encapsulating the highs and lows, the booms and busts, the times of prosperity and periods of recession. It's a narrative that's as much about human behavior as it is about numbers and charts. The book takes us back to the early 20th century, when the stock market was a playground for speculators and a mystery to most. It was a time of wild swings and rampant speculation, a time when fortunes could be made and lost on a single tip. It was a time when the stock market was, in many ways, a reflection of the wild, untamed spirit of a young nation. As we move through the decades, we see the formation of patterns, the emergence of trends. We see the stock market becoming more sophisticated, more regulated, more accessible to the average person. We see the rise of mutual funds and the advent of index funds, the democratization of investing. We see the introduction of new technologies, new ways of analyzing data, new ways of understanding the market. But most importantly, we see the lessons that can be gleaned from this long and storied history. We see the importance of diversification, of not putting all your eggs in one basket. We see the dangers of speculation, of trying to time the market, of letting fear or greed dictate your decisions. We see the benefits of a long-term perspective, of sticking with your investments through thick and thin. We see, in short, the wisdom of the intelligent investor, the investor who doesn't chase after quick profits but seeks out solid, undervalued companies. The investor who understands that the stock market is not a casino but a marketplace. a marketplace where companies are bought and sold, where value is created and wealth is built. Through this analysis, the intelligent investor provides a roadmap for navigating the complex and often turbulent waters of the stock market. A roadmap that, while not guaranteeing success, can certainly increase your chances of achieving it. Understanding the past allows investors to navigate the future with confidence. Graham introduces the concept of the defensive investor and their relationship with common stocks. The defensive investor is a character that Graham crafts with immense care. This investor is not one to take the bull by the horns, but rather prefers to tread carefully, making well-thought-out decisions. So how does this investor approach common stocks, you might ask? Graham suggests a few principles and strategies for the defensive investor. Firstly, he encourages the defensive investor to venture into the realm of common stocks, but with caution. The defensive investor should never put all their eggs in one basket. Diversification is key. It's not about picking the winning horse, but rather spreading the risk across a stable of potential winners. Secondly, Graham advocates for a long-term investment strategy. The defensive investor is not swayed by short-term market fluctuations. Instead, they understand that the value of common stocks is realized over an extended period. This approach requires patience and discipline, but it is one that has proven to be fruitful time and again. Thirdly, Graham emphasizes the importance of thorough analysis. The defensive investor does not buy stocks based on hearsay or market trends. Each investment decision is backed by rigorous research and analysis. This ensures that the defensive investor is not taken by surprise by any sudden market changes. Lastly, Graham proposes a simple rule for the defensive investor: never overpay for a stock. The defensive investor understands that the true value of a stock is not always reflected in its market price. They are always on the lookout for undervalued stocks, ones that the market has overlooked but have great potential for growth. In conclusion, being a defensive investor is not about avoiding risks. It's about managing them. It's about understanding the market, making informed decisions, and sticking to a long-term strategy. It's about not being swayed by the winds of market changes, but standing firm with a well-diversified portfolio. Being a defensive investor is about playing safe yet smart. The enterprising investor, another concept introduced by Graham, explores a more active investment approach. This type of investor delves deeper into the financial playground, seeking opportunities that others may overlook. But what does it take to be an enterprising investor, and what sets them apart from the rest? Let's unravel the mystery. An enterprising investor is, first and foremost, characterized by their willingness to dedicate time and effort to their investments. This isn't about simply picking a stock and hoping for the best. It's about thorough research, careful analysis, and calculated risk-taking. It's about rolling up your sleeves and getting your hands dirty in the financial soil. Yet, it's not all about hard work. Graham emphasizes that an enterprising investor must also have the courage to go against popular opinion. When others are fearful, they see a chance for profit. When others are greedy, they stay grounded in their analysis and avoid overpriced assets. This contrarian approach isn't for the faint-hearted, but it's often where the greatest opportunities lie. Graham also discusses strategies for the enterprising investor. These include buying into undervalued companies and selling when they reach their intrinsic value, investing in special situations like mergers and liquidations, and even becoming activist investors to influence management decisions. The key is to remain flexible and open to opportunities as they present themselves. However, with increased potential for reward comes increased risk. This is where Graham's wisdom on managing risk comes in. He advises diversification, investing only in companies with sound financials and never risking more than one can afford to lose. The enterprising investor must always be prepared for the possibility of loss and have a plan in place to manage it. In the end, the enterprising investor is a proactive, courageous, and disciplined individual. They see investing not as a gamble, but as a business venture. They understand that success comes not from luck, but from hard work, analysis, and a sound strategy. For the enterprising investor, risk and reward go hand in hand. The intelligent investor, a beacon of wisdom in the world of investing, imparts enduring lessons. We have journeyed through the fundamental pillars of investing, beginning with the rock-solid foundation that underpins every successful investor's strategy. Recognizing the importance of investing, not merely saving, sets the stage for financial growth. We delved into the often overlooked aspect of inflation, understanding its subtle yet profound impact on our investments. Looking back at a century of stock market history, we learned from the triumphs and pitfalls of investors who came before us, gleaning invaluable insights from their experiences. We explored the concepts of defensive and enterprising investors, each with their unique approach and risk profile. The defensive investor seeks safety and adequate returns, while the enterprising investor is willing to take on more risk for potentially higher rewards. Armed with the teachings of the intelligent investor, every investor can navigate the tumultuous seas of the financial market with confidence.